Good morning, traders. Chris Buss here with Traders Profit Compass with another edition of Before the Bell, your home for actionable pre-market content for Tuesday, May 31st. It is 6:30 a.m. as I'm starting the video. Quick look at futures. Bitcoin with a big breakout, up 10%. Oil also on the move, up 3.3%. Equities are wobbling a little bit this morning in the futures market, down between 0.4 and 0.7%, depending on which index you're looking at. Gold and silver relatively flat. Nat gas is relatively flat as well. Macro front. President Biden has called Jay Powell up to the Hill today for a meeting, probably getting their heads together on inflation. Probably see I'd assume you'd see a little announcement, or at least from the press secretary, what they talked about, Don't know the exact timing of that meeting, but it may be important. Also, over the weekend, the European Union affirmed their plans to ban Russian oil by the end of the year. That's going to be phased in between shipping oil via shippers and then oil via pipeline. But they're standing by that commitment. Seeing a pop in oil this morning, like I said, of up around 3%. We've got Case-Shiller housing this morning, housing prices, Chicago PMI, and the Dallas Fed. Over on the earnings front today, after the bell, the biggest one I saw was Salesforce, CRM. So you'll want to take a look at that. And if you're new to the channel, please run your player at 1.5x. I think that's the right speed. A lot of charts to go over, so let's dive right into it. And oh, by the way, hope you had a really nice Memorial Day weekend with that extra day off. That was nice. So getting here into the US dollar chart. This is kind of fallen off the radar lately, but I want to bring it back into focus. Coming off a 20-year high right here at 105 and has rolled over for the last couple of weeks. I think an important line to keep in mind on your chart is the intersection of this uptrend line and lateral support coming in at about 101. Do we pull in here and then reaccelerate higher? Or do we roll over, come back down to 99, and potentially find this more conservative upline off of last year's this low point back here at 92? It's going to be important for a lot of things. Falling dollar usually helps commodities. It usually helps emerging markets. So keep Brazil, EWZ on your radar, and the commodity complex. I mentioned Bitcoin with a big breakout here over the, actually it happened yesterday, so unless you were dialed into the futures market, this probably caught you by surprise over the holidays, but nice break up here. We're in this resistance zone. I think if you can get a break above, what would it be? Don't have it exactly, obviously, but around 33,000 would be important. Or you can wait until the 50 EMA, which comes in at 33,892, would be an important technical level to recapture with an upside target up here towards 38,000. You can see this line of resistance here at about 38,000. So keep an eye on Bitcoin. even if you're not trading it, it's been correlated pretty well to the NASDAQ as far as risk on, risk off sentiment. So just in the last week, there's been a departure there. But I mean, this is I think a welcome sign if you'd like to see the Qs drive higher. Put to call ratio, some call buying on Friday, but not above the extreme levels. So I think there's still a tentative air out there on being long. Our oscillators did an absolute moonshot Thursday and Friday of last week, with NYMO popping all the way up into this 106 area. So definitely multiple yellow flags there. But let's set that aside just for a second. Let me drive through, and I'll try and weave back in our NYMO readings as we look at the charts. High lows, we did manage to eke out some positive numbers here. Really have not hit escape velocity at over 100. We're sitting here at 52. The NASDAQ oscillator up here at post-COVID highs at 80. You can go back in the chart. You got to go back into the COVID era to find higher readings. And here on the NASDAQ high-low, still we're not able to break above the zero line, sitting right here at minus 64. It was interesting, and I don't have the tweet available to share with you. I should have clipped that, and now I can't find it. But somebody went back and looked at occurrences where the NYMO made a massive thrust like it did, like only happened, I think they quoted, 5 times in the last 30 years kind of thing. And it actually showed it was the start of something bigger rather than the start of something worse, in the sense that that marked the top and then it just fell apart from there. So I thought that was interesting. Usually I don't get all hung up in the last 15 out of 16 Aprils were positive. That was the big thing going into April this year, and of course it was a down month. So these things are interesting, but I don't think it's something to get too wrapped up in or trade off of. I think each occurrence is its own thing and has to be taken in context with everything else that's going on. On the weekly chart, we had, 7-8 down weeks in a row. We put in a nice impulsive candle on Friday to close out the week. This sets up as a 3-bar reversal, 1, 2, and 3, taking out these candles together and breaking above this 410 line, which I think is going to be an important level to watch. Moving on to the SPY daily, you can see that we made a push right up into this resistance zone and actually broke out after hours, and we made it up to 417 near the 50 EMA. So I think you're going to want to keep actually a few levels, 410, 415, and then overhead on the 50. A reclaim of the 50 would be a really bullish development. Then it should act as support with a push into and towards this gap with a gap fill and tag of the 200, which comes right in at 4,300. If we zoom down, of course, this area here, I had it red on the other chart, but now it's green because we recaptured what was once resistance is now support. So let's fine tune the things that we want to watch today really closely. Number one, we've got a pre-market high, which was the high, the after hours high close on Friday up towards 417. We're down a little bit here on the open, so that'll leave a gap above. We're used to dealing with that. If they break it higher, playing for that gap fill and at a minimum touching the Friday close or the Friday after hours high before the weekend started, that would be important. Here's your gap above that remains to be filled and some intermediate resistance levels for you. On the downside, I think you want to hold the top of this old gap that runs from 406.41 to 411.34. I think if you lose 411.34, that you will roll down to the top of this unfilled gap here from 407.70 back down to 405. And if we got a pullback to 405 that held, I think that would be a really, really objective spot to try along. Why? That was a breakout area. You can see these prior lows back here in early May all came down to 405 and held. So for me, 405 is a big line. If we came down here, filled this gap, technical check mark, and then if that held, look for a bounce. If it doesn't hold at 405, it's probably just going to keep rolling over. QQQ weekly, we did not recapture the prior lows. You can see that 310 is a point where the large volume over price bar comes in. I think this week it's going to be important to recapture 310 on the weekly if this advance is going to continue. And I think that's your pivot for today. That close on Friday. Look back in the charts. If you can catch that, I don't have it here handy, that after hours high on Friday is going to be important. And then the big level is this 317, also where the 50 comes in at, let's just call it 320. So we've got 317, we've got the 50 at 320, and then we've got the top of the range at 322. I think that's going to be a super, super big zone. So if we can break above 310, my target would be this 317 area. If we roll over, I think you got to be focused on this gap. I believe I've got it marked here. Yeah, 302.42 down to 299. I think if we lose 305 or 306, depending on how fine-tuned you want to get it. Remember, this was an old gap, so there may be some muscle memory there. We may come down and either touch the top of the gap here at 302.50-ish and bounce, or we may fill it and then roll right down to this 297.50, 298 area. I think that's important. Why? Because you've got a high volume, high volume over price bar here, and you've got all these lows that held at 297.50. I think that's kind of like your line in the sand, if you will. Having a moderate pullback after this run wouldn't be the worst thing in the world. Anytime you get a 6-7% run in a straight line, even just to burn off some of these overbought conditions would be fine. But you gotta hold 297.50. So you could even, I didn't do it, but you could put your fib retracements onto this run here, and I can just tell you, just because I've looked at a lot of them, this looks like a 38% pullback off of the lows, and I think that would be fine. I would be real concerned if we lost 297.50 on the Qs. Weekly on small caps, I think the level you want to watch above on the weekly is 192.50 to get back into this $20 wide consolidation area. If we zoom in to the daily chart, it shows that on the daily, we did have some lows that probed down into 187.50. If we go back on the weekly chart, that's right in here with these wicks that came down. So, and that corresponds with the high close on Friday. And notice we've got the 50 EMA coming in here at 188.73. So this is going to be a very important level, 187.50, and then the 50 right above it. If we can reclaim this 187.50 and get above the 50 EMA, I think there'd be a great chance to come up here towards, let's call it 197.50, to tag this downtrend line, and then that would be a big level here to possibly punch through and tag the 200, and then probably roll over. Let's look at the 60-minute chart for some resolution on the run and where some pullback levels may be. I think you got to hold 183. We had a sliver of a gap. I mean, not even hardly measurable. I think it's 75 cents, something like that. If things wobble today and price continues to roll over from the pre-market and we roll into 183, I think the uptrend is still intact. If you were to lose 183, then I think you roll down to 179. At 183, you had this high, you had support, so it should act as support here. And if it doesn't, then check mark for the bears. I think they would be able to get some momentum there and force this thing back down to 179. And I think the ball would be in the bears' court if they were able to get it down to 179. I really want to see this 183 hold. Moving on to Facebook, really nice move in the gap entry. If you were tuned in and dialed in on that, almost got up here to this gap fill at 196, fell a little shy on a pullback. I'd like to see price hold this 190.75. If it did, that's fine. Come back up with some acceleration, fill the gap, break above 197.85 here, and then open the door up towards the low 200s, 202.50, 209, something like that. If this thing rolls over, you can use these levels that we pointed out last week that had potential to be resistance should be support. So you've got a line here at these lows at 190.75, and then you've got a low here at 186.50 that you can use as levels of support to see if it holds. But like I said, if I was long, I'd really want to see 190.74 hold on that chart. Apple had a really nice day on Friday. Left this gap behind and was able to fill this upper gap. So now on the upside, 151 is an important level on the upside to recapture this level here. You can see the lows that held, so that now that's resistance. On the downside, I really would like to see 147 hold. That was a low back here. It would also represent just, coming back in to the old gap and then holding. I think that would be fine. I'm long Apple. I rolled up. I think I'm in the Apple 150s for June 10th. So I bought an extra week of time. I took off the win from 140. So now, I took off all that, went to the bank as we discussed, and I would probably, if we lost 147, I'd probably just take it off and then wait to see if this gap fills and all that kind of stuff. I think longer term, it needs to hold this 144 area. That was an important level on the way back up. You had a little flag here, and you had a low here. I think 144 needs to hold to keep the bull thesis intact for Apple. Otherwise, could roll all the way down to 140. Tesla, what I've done here is drop in a little trend line off of the lows. Nice, steady climb. I think if this thing wobbles this morning and loses 750, You're probably going to come back down here to 720, probably quite possibly even fill this gap down to 708, and then potentially 700. I think 700, if you're a Tesla bull, is your fail-safe line. I could easily see a pullback to 700 that holds and then bounces from there. And that would probably be in conjunction with what the rest of the market's doing. I would not be holding Tesla long if it cracks 700 to the downside. I would certainly switch my bias there to bearish on Tesla if we just roll over, fill this gap, come down to 700, and just keep on going. So that's what I see there. On the bull case, we open lower, have that gap above, come up, fill the gap, and then try to make a run towards 780 and potentially 820 down the road. Microsoft did great on Friday. Well, it was a market performed 3%, but I was long, so that paid off. I've got a little level here at 270, which was the bottom of this flag. You can see it did not quite fill this gap. And what I did was I put a measured move tool on the structure just to give an upside projected target. Remember the setup. We had the beginnings of a W formation, left side of the W, rally, forms the middle. Then we start building out the right side of the W, and we got a divergent low back here at 248. Lower low in price, higher low in momentum, and then a higher low if we go from back here up to here. I don't have it drawn in, but you can see the RSI low at the second low in price is higher, and then we went from there. So how you project the target is from the base of the structure to the high point of the W, then that's your projected move. 6.5%. Have a hard time reading that. Anyhow, gives you a measured move up towards 284. I would be concerned if Microsoft rolled down and lost 266. Come down, fill that gap, then it's got to go north. Otherwise, you lost this support, you lost that support, and then you lost the high volume overpriced bar here. That would not be good. Then I would look for 264 and 260 on the downside. So that's going to be another, I'm going to treat it just like Apple. If it looks like it's all falling apart, I will get rid of my Microsoft calls quickly. Probably not going to go short. Probably just wait to see how far they push it south, and then try to regroup here at 266 if it looks like it's stabilizing and looks like that area is going to hold. Amazon outperformed 3.66%. I think a key level is this 2300. I think you break above that, you got to run the 2400, then potentially 2500. We've got a gap here that I've marked. On a pullback, I think 2200 has to hold. Why? Large volume over price bar, resistance, 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 support, support, resistance, resistance, breakout. So now, if this thing does roll over, fill this gap, it's got to hold 2200, or else, then you're on the free 50 club to the downside. Your first target is 2150. Your second target would be 2100. And then everybody will look back and say, told you it was just a bear market rally. Told you it wasn't going to last. Blah, 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 blah. All in hindsight, of course. I think you would find it hard to, on Friday afternoon, up 3.6%, having people say, I'm shorting it here, I'm shorting it here, bear market rally, it's over. So, probably quite a number of people out there are still long if they got it at any point along the way. So, I think those are your key levels: 2300, 2200, etc., and then 2400 to the upside. Google had a great gap fill here from 21.25. You got $125 out of that move. It did leave a gap behind. So on a retrace, you got to have 2150 hold. If it comes, up here, comes back to fill the gap, I would imagine that would need to hold, or it comes all the way back to the bottom of the gap at 21.25. I think on the upside, we're at an important level as well, 22.50. You break above that, I think you can get a push towards this 23.15, and then most likely 23.75. Why? Because this was an old trading range, and you can actually see if I extend this, I could easily extend this box out to that level. You break inside a prior trading range from below, your target is the opposite side of the box, and that's up at 23.75. Netflix, for me, 187.50 is the level that it needs to hold. Why? Just for the same exact reasons. We had a trading range back here for quite a number of days that went down to 177.50. So got to hold 187.50, or else you're going to come back down and tag 177.50. Nice thing about Netflix, there's no gaps in here to worry about. On the upside, you break above this, wherever it is, 195. I think you can see 200, 201, and then 210 if the rally continues. SMH, fire in the hole, right? 224, actually 223 if you were bold. Then you got a breakout here from the trend line. That was a potential entry. 228 was also an objective entry, as was 233, and then right on up. We left a gap here. I'm long. Of course, on Friday, rolled up the strikes, went to the bank. Don't have a lot on the table right now. So on any kind of pullback, you got to have 240 hold. Otherwise, you break lower and fill this gap down to 236, where I would like to see that hold right there and then bounce on the upside. A breakout above 247 opens up the door to 252. ARC-F broke above the trading range, gap to fill. Your measured move target is up here towards 1975. If you got a breakout from there, basically another dollar up to 2075. On the downside, you really got to have 1850 hold if you're long, because a re-entry back below 1850, you're back in this trading range, and then your target would be 1750 at the bottom of the prior trading range. Exact same setup here with ARC-G. You got to hold 3275, or else 31 comes into focus. On the high side, 34 is a really, really important level. Why? It marks a prior trading range, and you had all this support here. Support. Right here, there was a decision point where it broke. So recapturing that 34 level opens up 35.5, 36 to the upside. ARC, same setup. You got to hold 43.50 on any kind of pullback. Otherwise, your target becomes 41. So any kind of pullback in this area is fine, as long as this line at 43.50, 43.75 holds right here. And you got a lot of support there, so it should. ARC-W got above this hourly downtrend line. Still got a gap up here to fill between 59.50 and 61. Any kind of pullback, I think you got to have, you'd like to have 57 hold, but you got to have 56 hold on any kind of pullback, because these were what I consider fake breakouts. Yes, there is some support there, but the meat of the trading was between 56 and 52.50. So you got to hold 56 on any kind of pullback. And if you're long and you see 56 breaking, I would exit my position. So under normal circumstances, you know how much respect I give to that NIMO and the oscillators in general. In a normal setup, it wouldn't be unusual for me to be like full short at this point. That doesn't feel right to me at the moment. Price is going to talk based on the levels that that we just went over. If we get a pullback that holds in those levels, I'm going to stay long. I think it speaks to our strategy last week of going to the bank, taking a lot of risk off the table, making sure we got paid for the run that we had last week. So today, we bought ourselves some time, and on any pullback, it's not going to be as painful as it would have been if we just, went into the weekend, balls to the wall long. Hopefully you did go to the bank and peeled off some delta. I still think a drive higher here would really keep people off guard. And I think there's still a fair number of shorts out there that keep trying to, acknowledge this as a bear market rally, but now it's over. Keep trying to short that high on the rip. And they were definitely losing last week. Now, we also need to discuss quantitative tightening starts tomorrow. Any month-end buying, month-end rebalancing will be over as of today. So we still got to be hyper vigilant. Do I think there's an opportunity to go higher here? Yes. But I'm not willing to stake my career or my P&L on it, kind of thing. I'm willing to sit through a minor pullback to the levels that we discussed. But if those levels break, I'll be closing, my Apples, my Microsofts, my semiconductors, that kind of thing. What is going to be nice is that if you're long the energy trade, that's going to be a nice counterbalance today. I mean, we're up 3%. A lot of you are in USO. A lot of you are in XLE. I can imagine a lot of you are in individual oil and gas drillers. So those should be nicely positive today. So hopefully that'll be a nice counterbalance. Let's wrap it up there. Just quickly, if you're new here, you can tell this is a technically driven channel. I give you great levels to shoot against during the day. Hopefully that'll give you objective trades to put on where you can locate stops, look for targets, etc. If that appeals to you, please subscribe, hit the alarm bell, jump over in the show notes, find the blog link to drop in your email address. That way you'll get all my commentary, morning, noon, night, weekends, all that kind of stuff, and we'd be glad to have you. So let's wrap it up there. This has been Chris Buss with Traders Profit and Compass. Talk to you next time.